What do you think about option trading?
Blank idea.
And this is the video log that takes 30,000 to a million. Special edition day today, and I'm being a caddy for my friend over here, Tom. We're playing golf. Just a really chill, relaxing day today. I gotta get used to doing this because I'm going to Bulgaria in a little bit. I'll be there for 2 weeks and a half, and I won't be at the computer. Oh, looks like you missed. How you doing? Did you make it in par? I don't know how to speak golf terminology, but anyway, I'll be going to Bulgaria, so I won't be making many videos from the computer. So I have to get used to. Let's see if we can catch them. Get used to doing this. Back in the studio for now, though, and today I want to talk about why you're always losing money on options. All right. But first, let's go into the account so I can show you how bad of a week I've had. So I'm down 2.4%, and it's mostly because of Apple. No big news there. It's a big part of the portfolio, and the week is looking horrendous, down 3.47%, which is less than the portfolio overall, and it's dragging it down. I probably would have been down maybe 1% or so if it wasn't for Apple. And EXK also. Oh, I did buy, to update you a little bit, I did buy some shares, 300 shares of EXK at 187. It closed down at 186, and I'll be scaling into the stock as we go. I still have some short-term treasuries that I can get rid of to buy the stock. So without further ado, we're going to talk about, or I want to talk about, why you're always losing money on options. And the reason is because you're greedy. You're greedy. That's why you're always losing money. All right. When I'm being greedy, that's when I lose money too. So the thing with options is that it's high risk for high reward, right? Sometimes if you set it up that way. But many people forget about the high risk part. They just focus on the high reward part, and that's what I like to do too. But then the risk part is just ignored. And it can't be ignored. You can't escape risk. All right? There's always risk no matter what you do. So I'm going to go into some options here and under Apple because it's the most well-known company, biggest company, etc. So I'm going to take a look at some options and you'll see what I'm talking about here. So I'm going to go into, let's say, for example, May 17th, and I'm going to look into buying some calls, which is very common. People buy calls all the time. It's the most popular thing to buy. So let's say I'm thinking that I'm bullish on Apple, and I'm gonna buy a call for Apple, the $210 call, because it's only $22. And I'm thinking, all right, I'm only gonna put up $22 and have a chance to win hundreds, right? When Apple goes to 220 or something like that by the end of the week. So that sounds like a great plan, and you don't lose anything but the principal here, which is $22. And that's great. So you go ahead and purchase that. But then what happens is the likelihood of this scenario playing out, I mean, it's very slim. So if you want to have a really good chance of making money, or at least a much better chance of making money off of the option, is you got to put up or shut up. You got to buy that 318 $197.5 call. Because then when the price goes up even just a little bit, you're gonna make some money. But you have to keep in mind that not only does the price have to go up to 202.5 for you to make any money, right? Because you will have paid a lot of premium for that. Not only that, but it's a depreciating asset, the option. So when you buy it, time starts ticking against you, and unless it closes above the price of Apple closes, above a certain amount here, you're gonna lose everything, right? You're gonna lose your entire premium of 318. So yes, there's a bullish bias on stocks, period, but chances are you're gonna lose. You could buy the $465 option at the 195 call, and to break even, the stock will need to be just a little bit higher than what it is right now. So you can play it that way, but you can buy at the money options because they're more pricey, but you actually have a higher chance of making money, if that makes any sense. So the more greedy you are, you want a huge reward for just $22. It's just not very likely to happen. It could happen, but the percentage is very small. It's high risk, high reward, right? And the high risk is that you're gonna lose all your money. All right, let's look at the put side. So let's say you think Apple's gonna go down. So you decide to only buy the $26 option here. So by May 17th, you think Apple's going to go below 180. So it actually has to go below 179.74 just for you to break even. All right, it needs to go down a huge amount. Since there is an upward bias usually on stocks, especially like Apple, this is going to be a better deal for you than on the upside, but also even a less likely chance to happen. So it could happen, but the chance is low. Again, high risk, high reward. You're better off buying a put at the money here, maybe the 197.5. You put up $333, and it only needs to go down to 194 for you to break even by May 17th. It needs to go further than that for you to make any money altogether. So you got to keep that in mind. Again, with buying options, time works against you. So chances are your option's going to expire worthless at the end of the week, and you're going to lose your premium. That's why usually selling options is a bit of a better deal, but there's two sides to every trade for a reason. It's not a guarantee, and you're probably going to end up losing money anyway. Also, you need a lot of capital to sell options. If you want to sell covered options, which is what I like to do, you need a lot of capital. You're going to need $20,000 to sell a put. You're going to need 100 shares to sell a call, and that's a lot of money. And people usually don't have that much money just laying around for them to collect, $20, $30, $100 premium. So it might not even be worth it because you might miss so much upside on the stock, or you might miss a lot of downside as a buying opportunity. So it might not be worth it at all to do it. So there's two sides to every trade. You got to remember that. Make sure that you're really sniping out your trades, and you got to understand that what the risk is, how much you're more likely to use. And if you want to just short a stock and just keep buying puts, you got to be prepared to lose a lot of money if the timing isn't right. And my personal advice would be just to never play with any money you're not just willing to lose altogether. If you want to be safe and you want to sleep better at night, do a diversified portfolio, buy some index funds, I don't know, even buy some gold or some treasuries or some bond funds or what have you. Or just put it in your savings account. You can find 2 to 3% cash savings account, 2 to 3% yield per year, and just put it there, and you don't have to think about it so much. You can sleep all night. It's gonna keep up with inflation more or less, and you can use that as a savings vehicle. But again, I'm not a financial advisor, so take anything I say with a big grain of salt, or consult a professional if to find out what kind of moves are suitable for you. But I just wanted to shed some light on why so many people keep losing money on options, and why you could be one of those people. So you may want to be really careful with them to save yourself some struggle. Just understand what kind of risk there is out there and what the likelihood is of you making actually money on your option plays. All right, so with that troublesome and kind of worrying, light shedding talk, I want to leave you with some serene scenes from the golf course, and hopefully I get better at doing those type of videos, because like I mentioned, I'm going to be away for a couple weeks and a half, and I want to still make videos while I'm away on the other side of the world. So here it is. All right, peace out. This is take one. Tom Alsop's legendary drives.
There is only one take one.
Only one take one.
No take two.
One take Drake.
You know what I'm saying?
Quiz. Woo! Sounded good. But it might murder a duck. It's not exactly. Wasn't exactly a line drive.
Alright, watch
Catch
this
my
shit.
drift. I'm watching it. Woo. I think that's onto the tennis court.
That might actually not be very far away. The green's around the corner.
Can you see the green from here? I can't even see it. I can't see it.
Alright, geezer, here's what we're doing.
I'm listening.
Watch this.
Got it. Can't wait. Oh wow, that's beautiful.
That's on the green. That's on the green.
That was really nice.
Green.
Real nice.
Know what I'm saying?
Alright, well, we have a friend. Just relaxing. I don't think this guy cares about the Dow.